that the earnings between Amazon and Google. I mean, yeah, I don't know if you've seen these big guys report, but it is absolutely insane. The numbers that they're blowing these numbers out, blowing these numbers out. It's going to continue, but I know you've been covering it well, Daniel, right?
Well, I don't have all the details in front of me. I've been really bullish on the bigger names, simply for the change in policies and what I think is going to come down. We've been going back and forth a few times over the past several weeks. I think any weakness that you see on the headlines around breaking them up, or monopolies, or taxes over in Europe and in other countries, when people are even here in Florida. I always screw it up. What is his name? DeSantis?
DeSantis, yeah.
Yeah. He's threatening to fine,
Governor.
big tech if they find to be censoring elected officials, like something like $100,000 a day and all this kind of stuff. Anyway, these guys just have unbelievable businesses. Everybody uses them. Frank and I was talking to you about, I know a ton of people that are upset about Facebook for a number of different reasons. But you know what? They still get on every day, a couple times a day, and chat or post stuff or talk to their friends through it. So Google, when you're $2 trillion companies and multi-trillion, I mean, I think Google's probably between one.
Still,
is it still one? Okay.
So.
I think Microsoft's over two now. I know Apple's over two now.
Apple's over two, yeah.
These guys are still growing revenues by 20% and more. And individual in multi-billion-dollar divisions like Amazon said their run rate for Amazon Web Services, AWS, is $50 billion a year now.
And that's the guy, Jeff Bezos stepped down. The guy who's running it is the guy
he stepped up.
I mean, yeah, basically. He's executive chairman, means you're more hands off, and everyone's just going to report to you now. You're not what's focused on other things. It's not a negative, because the guy's taking over is the guy who.
Hey, here's what we're going to do. Okay, I'm the new CEO.
Cloud.
Here's what we're doing.
Yeah.
Jeff, you okay with that? Okay, that's what I thought.
Yeah, exactly. So and that guy's really good that's taken over for him. So he's not getting as much attention as he deserves. That's the reason why that cloud business is so big. But just to show you guys some numbers here, which is kind of funny. This is from briefing.com. Again, a site I use. Whatever. If you want to get it. It's a little expensive, but it's pretty cool. Just highlights everything for you. Right here, just highlighting this. I mean, crush earnings per share forecast. This is Google. By its largest margin over 5 years, $22 a share compared to, $15.98, whatever. Revenue growth ramping 23.5% compared to the expectations of 13% growth. A lot of times you see earnings really beat. They cost cut. They do different things. It's the sales. If you're able to see those sales, now you're seeing sales increase. You saw the same thing with Facebook, you've seen the same thing with Apple, you've seen the same thing with Amazon. All these numbers are absolutely incredible. And what does this filter down to, Daniel? It filters down to, as much as everybody hates these companies, as crazy they are, they know everything about every one of us, because these are the sites that they know what we search for. They know what we buy. They know where we're going. And with algorithms and AI and all this stuff and 5G making it 100 times faster to figure this stuff out, they're able to predict what we're going to do when we're going to do it right now. It's insane. It's something I follow for over 10 years now. And this was going on 7, 8, 9 years ago. Think about where we are now compared to then. But corporations are going to pay a freaking fortune for this. If they could increase the money they're spending, the advertising spend, right? Return on advertising, they're going to do it. So they'll spend more money, but their results and their margins are incredible, because, you're not doing a commercial on TV where you really don't know who the hell's watching. And here's guys that, hey, Walmart, whoever, here's like people in your stores right now. What do you want to send them? You can't beat that, and people will continue to pay a fortune for it. So, it goes to the point where these companies aren't going away anytime soon. Even if there's, forced regulation on them, I just think the amount of stuff they're able to track, and I would say at least 90% of the people who are on these platforms and use these platforms have absolutely no idea what these companies are doing behind the scenes. I mean, you have no idea. I mean, yes, they had a Netflix, the social whatever. They have no idea how much just look at your cookies. Next time you pull up a website, go to that little block, right, in your browser. Next to the site, there's a little lock. And just right-click it, and it's going to say cookies in use, and click that, and click site set. These guys everything, every website. There's a reason why it comes up, but this is priceless. Everyone's going to advertise. Same for us. We could figure out who bought a newsletter for over $500. Group of people through Facebook or Facebook, whatever. in the past couple of months who, has numerous newsletters. I mean, I'd rather be targeting that crowd than just targeting anybody randomly. And it's just, these things aren't going away anytime soon. And these numbers, man, these analysts, first of all, the analysts got to get up to date with this shit. I mean, you can't be off by 30, 40%. Come on. That's your freaking job, right? You get paid for this shit. Like those are the numbers. Those are the numbers. Think about that. $13 and they reported 22. How do you get and it's been going on for the last 3 quarters. I mean, are you kidding me? What happens if you have a sell rating on it? If you have a sell rating on it, they just blow it. What are you going to do? Oh, we're going to continue. But come on, these analysts got to get better than this. They're horrible. They're useless if you're going to see this blowouts. They got to see it. They got to be tracking this stuff a little bit through, every single month and seeing demand. It's not that difficult, but holy shit, these guys kind of useless right now in these companies.
Yeah. I'll give them a little bit of defense because I understand, and you're right, they have a ton of information and they meet with these guys. So, but they do like Amazon. What do they report on operating income? Do you have it in front of you? And it was versus their own guidance of between like a negative $500 million and $4 billion positive.
Yeah.
So I give them a little leeway because, these companies have so much, they're so successful. Their services are so amazing that so many people use them. They have a lot of leeway on how to, claim revenue, et cetera. So I'm with you, though. I give them a little credit, but
the margins for the companies have gotten wider in terms of not margins, but just the spreads of
their
predictions.
That's a pattern too. I mean, there's a lot of sandbagging going on.
But that happened basically because COVID. But now by this time that COVID is actually benefiting you, right? Companies like Peloton, where you could actually predict a little bit better, where but they're predicting declines or very slow growth. I don't know. I just don't get it. But anyway,
no, I'm with you.
I mean, these companies probably still have much more upside, and companies that are trading at 30 times earnings are now trading at 22, 23 times forward earnings because their earnings exploded and some of these things went up a little bit. Google had the biggest run, I think, but Apple's starting to move up. Microsoft fell after those amazing results and now it's starting to move up again, new highs. But there is a rush getting into these large technology companies again. And thanks for helping me cover that, Ding. I really appreciate it.